What no one is telling you about the investment opportunities hiding in plain sight in the big tech stocks. They've been making headlines lately and not for the reasons you might expect. I'm going to break down their recent performance and reveal opportunities that only smart money investors are seeing and taking advantage of. Let's kick things off with a quick recap of where these stocks stand since July and how they're faring compared to their all-time highs.
Apple is down 9%. Google's parent company, Alphabet, has taken an 18% hit. Meta was down 9% but has recovered by 8%. Microsoft has seen an 8% dip. Nvidia's fallen 17%. Amazon's down 8%. And Tesla has dropped 16% from its July high, but is still a massive 45% down from its November 2021 all-time high.
Now, if you've been anywhere near social media or financial news lately, you've probably seen a flood of doomsday predictions. It's like clockwork. The moment big tech starts to stumble, everyone and their dog starts calling for a market top. But here's the thing, we've seen this movie before, and spoiler alert, it doesn't always end the way these predictions claim. Back in July and in early August, you couldn't go online without instantly hitting a headline screaming about market carnage or epic cataclysms. My personal favorite was cash is king. It's like these folks forget that the market has ups and downs, but mostly goes up. But it's just not always smooth sailing. But here's where it gets interesting. While everyone was running around like headless chickens, something remarkable happened. In the second half of August, we saw the S&P 500 rally by 10%, the Dow Jones 30 by 8%, and the Nasdaq 100 by 14%. The Dow Jones even flirted with new all-time highs before the expected September corrections. So what gives? Why the discount between the panic and the reality? Well, that's what I'm here to break down for you today. First off, let's talk about perspective. The July and August declines caught a lot of people off guard. But here's why keeping your cool and sticking to a systematic approach gives you an edge over the hysteria. Remember, the declines in the major indices were primarily driven by big tech's stumble. If you'd been paying attention to smaller weighted stocks like Coca-Cola and Walmart, you'd have seen them actually hitting record highs, while everyone else was panicking about big tech. This brings me to one of the golden rules of investing. Ignore opinions, including your own. Opinions have a nasty habit of putting you on the wrong side of the market. Need an example? Cast your mind back to late 2022 and early 2023. Remember all that chatter about failing banks? It seemed like the financial world was coming to an end. At the same time, you had high-profile investors like Cathie Wood publicly dumping Nvidia shares, claiming the stock had peaked. Fast forward to today, and Nvidia has climbed over 1,000% since then, while the S&P 500 up more than 60%. Here's a pro tip. Analysts are paid to give their opinions. Reading them, no problem. Following them blindly, big mistake. In fact, once you gain some experience, you'll start to see just how disconnected these opinions can be from market realities. I like to say that Wall Street is often disconnected from Main Street or the High Street, depending on what you call it in your part of the world. The market can and often does rally despite the doom and gloom painted across our media channels. The takeaway? The truth is in the chart. Let them be your guide and treat everything else as background noise. So, what is no one telling you about big tech right now? Well, contrary to popular belief, big tech isn't crashing, far from it. In fact, what we're seeing is the formation of a base, also known as a consolidation. Now, let me tell you why this is exciting. Consolidations are like gold dust for savvy investors. They're sideways market that often precede major uptrends and that can last anywhere from 12 to 18 months, sometimes even longer. If we can identify these consolidations, we can build a watch list of stocks, set alerts for breakouts, and position ourselves to ride the next big uptrend. This approach forms a backbone of our strategy here at Sublime Trading for catching significant market moves year after year. Let's break it down stock by stock. Apple, the world's most valuable company with a market cap of $3.4 trillion, has seen a staggering 8,000% increase since the 2008 market crash. This year, it climbed 45% between April and July, followed by an 18% decline and then an 18% rally. Now it's trading in a consolidation pattern. This isn't a crash, it's a potential springboard. A move through the current all-time high could see Apple targeting $300 and beyond. Alphabet, Google's parent company and the fifth most valuable company globally, has rallied by 3,000% since 2008. This year, it saw a 47% rally from March to July before an
18% slump.
But here's the thing they don't tell you. It's declined to a major support zone, including the previous all-time high from 2022 and the $150 round number. These are key levels where buyers are likely to step in. Meta has had quite a ride, rallying over 1,000% since its 2012 IPO, including a V-shaped recovery of almost 500% from its 2021 to 2022 slump. This year, it climbed 56% between January and April, and has since been consolidating. Another 5% climb, and we could see a new record high. Microsoft, the world's second most valuable company, has seen a 3,000% climb since 2008. This year, it's up 28% from January to July, followed by a 17% decline to August's low. Now it's forming a base for the next potential leg up, with the $400 mark and the daily 200 simple moving average acting as support.
Nvidia, without a doubt, has been the star of the show, climbing over 1,000% since 2022's low.
It's now the third most valuable company globally. This year alone, it's up about 200% from January to June. After a 10-to-1 stock split in June, it saw a temporary rally, followed by a 35% decline and a 45% bounce. Now it's consolidating, with the $100 mark acting as a support zone. Tesla, while not as attractive in terms of current market structure, has still seen incredible growth, rallying by 30,000% from its IPO price to its split-adjusted all-time high in November 2021. It's currently in a wide long-term consolidation. Amazon has rallied by 12,000% since the 2008 crash. This year, it climbed around 40% between January and July, then saw a 25% decline to August's low, followed by a 22% bounce. It's now forming a likely base before the next potential leg up. So, contrary to the fear-mongering, the big secret that no one's telling you is that these big tech stocks aren't crashing and burning. No, they're simply going through a period of consolidation, which all stocks do after massive uptrends, forming bases that could serve as launch pads for the next uptrend. Remember, patience and a systematic approach are key. Don't get swept up in the hysteria. Keep your eye on the charts, build your watch list, and be ready to capitalize on the breakouts when they come. Tech stocks are looking strong in the market right now, but they are not alone. So it's in your best interest to diversify into other sectors that are also on the rise. Check out this video where I share 3 stocks in the real estate sector that are trading at a discount but already climbing.